Good afternoon, everyone. Thank you for joining us for this session. We'll talk about SM REITs, about the commercial real estate market. And so I'll just kick off. If you aren't familiar with HBITS, we've had a good 6-year history in the fractional ownership space. And during that period, we did upwards of 500 crores of assets under management. Now we've moved into the SM REIT landscape, which has been something that SEBI has been encouraging. And so we're one of the leading SM REIT platforms in India today. And SEBI came out with a regulation last year. And so we talk about SEBI a little bit, what that means for SM REITs and investments in general in commercial real estate. And to kick off, I'll just introduce our team and then jump into the real estate market outlook. So HBITS was founded by Shiv Parekh, who comes from a family background of real estate. He studied at both Stanford and Harvard, and then had experience in global organizations before he came into India and realized he wanted to do something different in the commercial real estate market. At that time, fractional ownership and sort of smaller investment in commercial real estate wasn't even around. So he was one of the pioneers of this industry. And then Sameer joined him, who was upwards of 30 years of experience in global banking. He headed global sales at Nomura, based out of Singapore. And he's an IM MBA as well as a CA. And me, myself, I'm Sarthak Dhingra, and I had acquisitions for HBITS. I've been in the commercial real estate space for 10 plus years. I spent 8 years at KPMG US in their real estate and infrastructure practice, and then also headed real estate for Fortune 500. And I've been at HBITS for a year now, or close to a year, and really been great to be a part of the founding chapter of the SM REIT sort of landscape in India. I have an MBA from ISB and then 2 degrees from Georgia Tech in architecture. So let's jump in. We'll talk about India's commercial office outlook. And to kick off, I mean, these are some very mind-boggling numbers, but India's office market last year across 2024 had the highest ever gross absorption of close to 80 million square feet. That's about 16% higher year on year. And this is going steady, right? And we are seeing that this is just the tip of the iceberg. So in 2022 already, we've seen in the first quarter, 2025, sorry, we've seen that the top 6 cities had about 19 million square feet. And if we talk about the first 2 quarters, it's been close to 40 million square feet as well. And this usually picks up more so in the second half of the year. So year over year, there's been a good increase of about 19 to 20% in the first half of the year. So it seems the momentum has just been going, and occupancy levels have been rising. Vacancy levels are drastically dropping. I think in 2023, we were at vacancy levels of about 19%, which today are close to 15%. And this of course, is going to continue to have a downward trend. A lot of momentum in grade A lease spaces, a lot of large occupiers coming into the market. And we also see a good chunk of the lease activity that's happening is from global capability centers. And to add to that, right now, GCCs occupy about 25% of India's total office stock. But out of the top 2,000 2,000 companies in the world, 80% of these companies do not have GCCs in India yet. So that demand is still untapped, and we'll see the demand continue to rise, and vacancy levels drop, rents continue to increase. In terms of where the demand and absorption is, Bangalore has really been leading because of the GCC trend, as I mentioned. Mumbai, very stable, growing year on year, contributed by the BFSI sector. And of course, Pune, Chennai, Hyderabad also seeing a lot of growth due to GCCs. And so what's a key driver of these micro markets, right? Of course, and how we evaluate for our own selves, right? If you're looking at a place for yourself, of course, access to metro, airport, business hubs is very important. And we're seeing most Indian cities are developing on the metro front, as well as more road infrastructure. As sitting in Mumbai, we can talk about the impact of the coastal road, right? And how that has opened up new pockets and will continue to as we see the northern sort of extension continue post Bandra. And then, of course, adjacency to institutional grade tenants, that sort of becomes like a microcosm of these IT or MNC parks, where a lot of these MNCs and other major occupiers co-locate, creating a sort of buzzing or secondary business district or micro market or sub market that is known for these kind of developments. Of course, overall low vacancy and high rents, that's from an investor standpoint really critical. And what other infrastructure pipeline, as I mentioned. So we have, of course, across the country, there's a lot of performing micro markets, and we look at these kind of micro markets as we make investments as well. And I briefly mentioned this, but who's leasing, right? So IT companies, of course, BFSI. And today in India, actually, a huge chunk is coming in from flex space operators. So uh, as a side note, India has the highest amount of flex workspace, work desks in Asia, right? And that's also because there's a good entrepreneurship and startup culture developing in India, but also a lot of multinationals prefer to work with flex space. So we're seeing a huge amount of demand coming in from there. A lot of quality focused. Uh, we are seeing demand for ESG compliant assets, grade A. Almost 93% of new stock that's coming in now is ESG compliant in some form, right? Be it LEED, Gold, Platinum, and so forth. So tenants are really gravitating towards this kind of quality asset. And we're also seeing long-term leases come in because of the supply kind of dropping and demand outpacing that. A lot of the tenants today want to lock in something for 9 years, 5 to 9 years, so that they have their assets secured and also get a rental rate that's secured, and protect, and they can invest very well in the asset as well, which is good for keeping their investment amortized over a longer term. So why does this matter for SM REITs? Right. So of course, from an investment criteria, these are the sort of things that an investor will look at in terms of what the tenant demand is, what the tenant lease tenure is, as well as what kind of investment the tenant has made. Right. And the longer the lease term, the better it is from an investment standpoint. So we'll come to more of these specific questions around SM REITs a little further in the presentation. And I do see some people raising hands. I just request that we can run through this and then we'll have a Q&A at the end. So you can go ahead and start putting your questions in the chat. And as soon as we get to the Q&A, we'll jump in and address everyone's queries. Great. So what does that mean in terms of micro markets and the tenants? Of course, we talked about that. But why do we invest in core micro markets that have high absorption, limited vacancy, good infrastructure, right? So the simple fact, and if someone is seen or would be familiar with BKC as well as so CBD Bangalore, etc., it's getting good assets with good access to infrastructure is getting harder and harder given the lower and lower vacancy levels. Today, in places like BKC, it's very hard to find any vacant space. And what that means is that if a tenant does vacate, and this could happen, maybe they want more space and they move to a larger building, the ability to release becomes very easy. So that's a core driving factor as to why I look at very specific micro markets and how that impacts. It's to protect your rental income, right? And then you get a better capital appreciation there as well, given that the rental increases there are outpacing the broader market. So in terms of how we select assets for SM REIT, of course, the identification and sourcing becomes very specific, and we'll go through each of these. Asset evaluation is done. We look at a negotiation to get a really competitive rate. We'll do legal, financial, technical due diligence valuations from third parties, and then make sure our regulatory structuring protects our investors' interest. And I'll go through each of these now. So from an asset identification perspective, right, focus on grade A properties and how do we source them? So we have a really wide funnel. We work with all IPCs, which is the international property consultants like a CBRE, JLL, Cushman, and the likes. So we work with local brokers and channel partners, and these people also have their ears to the ground. So we find a lot of high quality assets come through them. And then we work directly with developers. We maintain a robust sort of relationship with with developers so that as they're building something, we can be first to hear of it, or we can structure some deals where they bring the tenant and we can stitch something back to back, giving us some competitive edge against what the market would be able to immediately get. And in terms of the sourcing, I think we'd say that we probably only filter out 1 in 1,000 opportunities, or 1 in 100. So rather, let's put it that way, that would go to the next level. An ultimate closure might be 1 in 1,000 of what we may see in terms of what we actually would execute on. And then we have a strong reputation. We've done a lot of transactions in the past, and we also prioritize the micro markets that I mentioned. So how do we evaluate the assets, right? So tenant profile becomes really important. It's a major factor because corporates, MNCs, the credit risk is lower. So we make sure we look at that, listed companies and the likes, right? So that gives you the financial strength. We benchmark rental rates versus the market to make sure we're not majorly over rented. Your capital appreciation is protected, and also that you will get that capital appreciation. Micro market analysis, which I mentioned, keeping the vacancy rates low, and then of course building quality, grade A plus assets, the likes of which are highly sought after by these kind of global MNCs and listed entities, wanting to be in the premium assets, right? So coming to the negotiation part, we're very competitive in terms of what we work on, right? We want to be lower or competitive against the fair market value. Uh, Try to secure a long-term lease tenure and good rental escalations, and then ensure there are friendly deal terms with minimal risk. And we often make sure that we secure pre-leased or pre-committed spaces. And the difference here, pre-lease would be that it's already leased today, and or in terms of pre-committed, it's where we're structuring a back-to-back kind of deal. So you're getting the asset right at the start of the lease term. So both of these are ways that we make sure that we get a good rental return for the investors. And a very thorough due diligence process, right? We work with top IPCs and legal firms for the legal due diligence, top audit and other financial advisory firms for the financial due diligence, and then the technical due diligence and valuations are usually done by top IPCs. And we will make sure that there's no issue with the title of the property, which in India is always something that, because land records and so forth are not always that easy to obtain, it takes a lot of effort, and we make sure that the investor is absolutely protected without any gray area. And then we make sure rental cash flows are stable, compliance with RERA and other such municipal approvals. And the valuers then will independently verify and make sure that the capital value that we're paying is correct. And this is all disclosed to the public, right, as part of the SM REIT process. So it's very, very transparent. And then from a regulatory structuring perspective, we'll house the asset under an SPV. So the investor rights are clearly defined. This is governed by SEBI, and our fees as a management fee or acquisition fee or exit fee is all very transparently published, right? There's a detailed financial report or a detailed DRHP that we file along with all the financial disclosures. And this is made available to all investors. So I'll pause here and I'll introduce Shiv. I did mention Shiv at the start of the meeting, but Shiv, our CEO and founder, he's on here with us. And thanks for joining, Shiv.
No, great. Thanks a lot, Sarthak, for that summary of the Indian real estate market as well as how we look at assets. I think one thing I want to mention is that we should be the process that we followed for asset evaluation is extremely stringent, and very, very, very conservative and selective on the properties that we bring onto our platform. And basis that, we should be launching a SM REIT IPO extremely shortly. I see a lot of questions around the commercial real estate market, which I'll also like to touch upon. But I think I'll do a little bit more of that during the Q&A. Right now, I'll talk a little bit more about SM REITs, given that Sarthak just covered the commercial real estate market. So I think first question, that people might ask is, how is an SM REIT different from a traditional REIT? Well, it's in the name. SM REIT is a small and medium REIT. But what that means is, one is that in SM REIT, investors can pick and choose which asset they invest in, while in a REIT, it's more a basket of assets. And I think the other major differentiating factor is that in REITs, the developer of the asset is creating their own REIT, while in SM REITs, it's completely professionally managed and there are no related party transactions permitted. So we are taking third party assets and listing it on the platform. We are negotiating the best price on behalf of investors. And in fact, we ourselves are putting 5% in every asset. So now we can go on to the next slide. So I think SM REITs are, positioned as a fixed income opportunity because, these are long-term leases with kind of grade A tenants. Tenants that we've done business with in the past are the likes of, Microsoft, Toyota, ICICI Bank, and they give fixed, rental returns on a monthly basis, which we pay out to investors on a quarterly basis going forward. And these are long-term leases of, 5 years, 9 years, and it's a very stable and secure cash flow. And yeah, it has an extremely low correlation with the equity market. So what makes SM REITs an attractive investment? I think, Sarthak gave an overview of the commercial real estate market in India. And that forms the basis of why SM REITs forms an attractive investment, because the underlying product is extremely solid. One can make, 8 to 9% rental yield. Along with appreciation, one can make a 15 odd percent IRR, and minimum downside risk, because these are hard assets that are already constructed. So there's no financing risk, there's no development risk, there's no construction risk, there's no approval risk. Extremely secure and safe investments, and they're SEBI regulated and listed on the exchange. Is this suitable for retail investors? I think absolutely. I think that is, what this product is built for. It's built for, someone who has 10 lakh, 20 lakh, 50 lakh, a few crore to invest, to own parts of properties. Investors, can own a share of Tata stock, Reliance stock, and they own a share in a property. And that's what this, product is designed for. And further, it's a safe, secure product. Because these are, like I mentioned, assets that are already constructed, rented out to kind of your top tenants, not only in the country, but in the world. So yes, it's extremely suitable for retail investors. So far, the investors that have invested with us would be white collar professionals who work in MNCs, who work in large Indian corporates. We have chartered accountants, lawyers, doctors, military personnel who've also invested us. NRIs have invested with us. I think about 30 or 25 to 30% of our investors are NRIs that come from Middle East is a big portion of NRIs, Southeast Asia, Singapore, US, UK, even Africa, we have NRI investors from. So all kinds of retail investors have invested with us. So I think types of real estate assets, we look at offices, we also look at warehouses, schools, data centers. I think what primarily we look at is long-term leases with grade A tenants that are stable, secure, and safe, with a good upside potential. Can you exit or liquidate your investment anytime? These are listed on the exchange. Your units will be in DMAT. It's freely transferable to any other investor or buyer coming in. We have a yearly valuation report that will guide the price of the asset. But yes, you're able to exit the share at any point in time that you want. It's a smooth process, which enables you to exit your share. The tax treatment of SM REITs. I think this is something that makes SM REITs extremely attractive, because whatever rental income is paid out to investors as repayment of capital. And so effectively the tax that you're getting on the rental income is effectively zero. yes, you do have to pay long-term capital gains of 12.5% when you exit your share. But the rental income that's coming on a quarterly basis is effectively tax-free for you. I think this is an important slide. How do SM REITs compare to bonds, FDs, debt mutual funds? And we've tried to evaluate this across multiple parameters. I think the quarterly income, 8 to 10%, is higher than the other instruments. Liquidity is moderate. Yes, it won't be as liquid as a stock market where you list today and immediately you exit. But historically, we've exited our investors in 30 days, and now that it's listed, the liquidity would be even higher. Taxation is, it's repayment of capital, so there's no tax. We are SEBI regulated. Market risk is low because it's rental backed. Entry barrier, minimum ticket size of 10 lakh, and extremely high due diligence, as Sarthak mentioned. So I think why one should invest through HBITS, as a platform, we are extremely conservative in terms of the assets that we bring onto our platform. We have a very, very stringent criteria that Sarthak had, mentioned earlier in terms of sourcing the best assets in the market, evaluating it across various parameters, whether it's tenant profile, building quality, the strength of the leave and license agreement, the micro market. We make sure that the rental and capital value that we're entering at is below the market average. And then there's the negotiation that we negotiate on behalf of the investors, the diligence that we do, financial, tenant, legal, and then obviously it being a SEBI regulated product. So I'll pause here. I wanted to keep the SM REIT part short because we've had a lot of webinars around SM REITs. We wanted to focus more on the commercial real estate market, our asset evaluation process. So happy now to jump and deep dive into questions. So I think first question is, does SM REITs allow assured redemptions? So like I mentioned, these are listed on the exchange, and investors can sell their share or their units rather to any investor at any point in time that you want. Where can we see the offerings from HBITS for investors? Offerings can be, we are signing an asset extremely shortly. So I think very soon you'll be able to see an offering. We've been very particular on the property that we're bringing onto the platform, but very soon you should see our assets.
And that will be online on our website, and we'll also probably push it out via distribution list if you're registered with us.
Then there's a question from Amit. How is the market post-COVID? This lot of IT companies started work from home. What is the impact on the REIT market? I think this is a great question, and counterintuitively, India has really benefited, or the office market rather in India has benefited from COVID. And what's happened after COVID is that obviously in India, across the world, people were working from home. But what happened in the UN? But if you look at it, majority or 60 to 70% of the Indian occupiers are foreign headquartered companies. And a lot of these companies during COVID were working from home. And so our office staff can work from home. Why can't they then just work from India? And in India, the work from home environment is not as conducive as it is, say, globally. The internet connectivity, people live in joint families and small apartments and homes. And office provides a much better environment. And so in India, a lot of the companies move back to office, and additional lot of GCC demand, outsourcing demand has come to India post-COVID. And so as of today, across markets, whether it's Bangalore, whether it's Mumbai, whether it's Pune, across the board, rentals have shot up, and there's extremely, extremely limited commercial real estate supply. Hope that answers the question. Now there's a question, can you drive me through the process from selecting the property to maturity? How much rental will be paid? Will there be an increase in rental every year? Is there a lock-in for the payment amount? So I think obviously Sarthak explained the process of how we select the property, how we bring it onto the platform. Rentals are paid on a quarterly basis, And in terms of increasing every year, I think market norm is either it increases 5% every year or 15% every 3 years. There is no lock-in. You can exit your share on the exchange at any point in time that you want. And generally, we look to hold the asset for 5+ years, but obviously investors can sell their shares at any point in time that they want. And appreciation, historically, what we've seen is these properties appreciate 5 to 7% year on year. So your total IRRs would be about 15 odd percent, is what you can expect. Question from Amit: IT companies moving out of Hinjewadi, Pune, will it not impact vacancy levels? See, overall, I think the demand has been tremendous. Gross absorption has been extremely solid. A lot of outsourcing to India. I think what one must see is obviously, which micro market one is investing in, and within that micro market, the quality of that building. And once enters that building, are you entering at the right price? So one should obviously look at the building, the micro market, the price which one is getting at. Don't want to comment specifically on Hinjewadi right now, but when we evaluate a property, evaluate a market, we go deep dive into that specific investment. I think questions from Ketan on any good opportunity, like I mentioned, will be coming shortly. Ease of liquidation, I think now it's on the exchange, it's listed, and so you're not dependent, Ketan, on us for exit. The units are in your DMAT. You can transfer it on the exchange to any investor that you want. It's a question from Mahesh on the Trump administrative directive to US tech companies to stop investing in India, affect the Microsoft project in Pune. I think obviously no one can predict what Trump will do. But what we've seen so far is that a lot of the tariffs that have been put by Trump has been more on goods and not as much on services. And India kind of forms the backbone of services, not just to the US, but a lot of other global companies as well. And I think what I want to add over here is, the amount of real estate that's there in India as of today is minuscule. India has about 800 million square feet of Grade A offices. Manhattan has 730 million square feet. If you look at the population, the whole of US, it's 300 million, 400 million. India is 1.2 billion. So on a per capita per square feet basis, we're nowhere close to the amount of real estate and office real estate that India needs. So sure, there will be geopolitical challenges. There will be various scenarios, but we went through the worst of real estate and commercial real estate during COVID, and yet we are where we are today.
If I might add here,
yes, sir. Yes.
so in India, roughly the rental rates in the Bangalore and Pune, which is where the GC, and Hyderabad, where GCC markets are heavily concentrated as well, the rental rates are around $1 per square foot per month, which is about maybe 10th or 20th of what US rates might be or other rates might be. And then the cost of actual compensation is also maybe 1/10 or 1/5. So even if there is a 25%, 30% tariff on the services, the real impact is not going to be evinced because they're still coming out far, far on top from having the GCC presence. So, in the commercial real estate market, we don't see any impact to GCCs. And in fact, like I mentioned, there's still highly more growth scope for GCCs, given 80% of the global top 2,000 companies haven't even stepped in.
Great. Few more questions. Minimum ticket size 10 lakh. Anything open to invest will be coming shortly. Tax treatment, Deepak, we covered. It's repayment of capital. Expected rate of return, 8% odd rental yield along with appreciation, 15% IRR. Is this suitable for NRIs? Absolutely. 30 odd percent of our investors are NRIs, and it remains to be suitable for NRIs. Similar question from Tushar. On the taxation, Tushar, obviously there are different TDS implications for NRIs, and it depends on the TRC, tax residency certificate. So for the US, our RMs will reach out to you and take you through what the tax treatment would be. On exit, the tax treatment is a long-term capital gains, which is 12.5%. Question from Sanjay. Yes, you can use your current DMAT. You do not need a separate DMAT for this. Question from Sanjeev: does the investor get to choose the property, or it's more like a corpus and the manager decides? No, I think that's the beauty of SM REIT. You get to choose the property, you know which property it is, which building it is, who the tenants are, what price per square feet you're investing. You have all this information, and only then you are deciding to invest. It's not like we are taking your money and then we are deciding where to invest. We are first bringing the deal to the table, and then you are deciding whether you want to invest or not. Question from Mahesh: if I have a property or a plot which I want to rent out, will HBITS take that? Absolutely. As long as obviously it matches the parameters and the stringent threshold we have, we're happy to look at all kinds of, rented out acquisition opportunities. Why rental returns of one SM REIT is taxable and yours is not? I think every player has a different structure. It also matters whether you're taking over an SPV or an asset. So can't comment too much on other players, but this is the structure that we are working with. How much monthly returns approximately can one expect? So it's 8% odd a year, and then monthly that you can divide that by 12. Is there a lock-in period? No. Obviously, tenants will have a lock-in period to protect you, but you as an investor can then exit your share anytime and point you want. Sridharan, obviously, we'll be in touch if you want to contact someone in Bangalore. We have a team in Bangalore. A few of these questions are repeated. How can I get confirmed when applying for the upcoming SM REIT? Same as an IPO process, ASBA, you have to fill in an ASBA form, and then depending on subscription amounts, you'd get confirmed. The rental yield is paid out every quarter. And yes, that is just the rental yield. That does not include the property appreciation. Is there a possibility that there are no buyers when you try to sell? See, that possibility is extremely, extremely unlikely. Right? And same question can be asked that if I'm trying to sell my stock of Tata or Reliance, is there a possibility that there's no buyer? Yes, theoretically there is. But if it's a good financial product and it's offering good returns, you will find a buyer. Historically, all our investors who wanted to exit their share have been able to exit, and none of our investors have ever exited so far at a price that's below what they came in at. So extremely unlikely that you won't get a buyer. How is SM REITs different from fractional ownership? So SM REITs obviously are now regulated by SEBI. Your units are listed on the exchange. They're more easily tradable. And we have a much stronger compliance and reporting criteria now that we are regulated with SEBI. I think a few more questions on the lock-in, which we've answered. Vikram, do we have any REITs listed? We will be very shortly. Karan, where can I see the entire list of tenants, occupants? So when we list an asset, that will be on our website. There'll be a draft offer document that's filed with SEBI that'll have the full list of tenants and occupants. Similar question from Vinay. Yes, you can reach out with your property that you want to sell. Can big builders like DLF join this sector? So DLF can sell a property to us, but they can't launch their own SM REIT because there are no related party transactions permitted. Samir, considering current redevelopment projects, don't you feel like there will be an oversupply in the market? I think it's a great question. So all the redevelopment projects are in the residential market. And it's an extremely different market to the commercial real estate market. So on the residential side, whether there will be an oversupply or not, that doesn't affect the commercial real estate market at all. Yes, in cities like Mumbai, there is a lot of redevelopment going on. But that's a very different market, doesn't connect to the commercial real estate market, which there is no very minimal supply of. The agreement which the law firm has designed is much complicated and unable to understand by layman. I think obviously legal documents are complicated and they are lengthy, and that's how investors are protected. It's easy, it's readily available for anyone to consume, but that's why one has to look at the credibility of the background of the people that have established the platform and how they've operated in the past. A few more questions are a little bit of a repetition. If someone wants to invest for long term, what is the security one gets that tenant will not exit after lock-in ends, hence risk for security? I think this is a good question. And the question is, how does one make sure that the tenant is there for the long term? Because that ensures the stability of the rental. So there are a few different things. One, we look at, what rental the tenant is paying, and is it below the market average? So then the tenant is unlikely to leave. Other is, what is the rationale for the tenant being there? How long have they been there? What is the mindset of the tenant? We speak to the tenant before investing. We also look at what kind of fit outs and capex the tenant has put into the property. So tenants invest in the crores when they occupy a property to fit out the full property. Then we make sure there's a long notice and security deposit so that even if the tenant leaves, we're able to release it at a similar or higher rental. And we have great connects with HR heads, admin heads, IPCs of a lot of the tenants to get potential tenants into the properties as well. Ajay, yes, the next asset will be through the IPO process. I think Trump's policies and the fees I did cover. Naveen, the securities are traded either on the BSE or NSE. It's the same exchange that stocks are traded. It's the main board. In terms of exit, again, we can assist with the exit. We can help find a buyer, but one can exit their share on the platform, on the exchange rather, at any point in time that they want. Is it only IT the concentration, or will there be banks, hotels? It's across the board, right? So some of the tenants that we have, ICICI Bank, Microsoft. Microsoft is IT, but Toyota, Mane, which is a chemicals manufacturer. So it's across the board. IT is only a certain segment of the overall portfolio of assets that we have, that we bring onto the platform. Which asset class has a better IRR? Office, warehouse, or any other? I wouldn't pick any specific asset class in that sense. I think it has to do more with that specific asset, that specific investment, that specific location, tenant, micro market. Deepak, mean to say there is no TDS? No, I mean to say that the rental income is not taxed in your hands. It's just your cost basis that's reducing. So it's not just TDS, it's the return on capital, and hence the rental income is not taxed. Mohammed, if you invest 20 lakh, yes, you'll get rental income from the next quarter onwards. Mahesh, you said quarterly payout is tax free, but in the Microsoft project, it is taxable. So that is the earlier structure. That's the fractional ownership structure. It's the SM REIT structure that's going to be quarterly, and it's going to be effectively tax free. I think there are questions on a competitive SM REIT platform, but would rather not comment on that, Ravindra, because that's about another player. Rahul, SM REITs are sold via merchant bankers. Does HBIT still have partners? Yes, we'll be working with multiple partners as well. We need to educate various people and investors of this product. And so we'll be working with a lot of partners because a lot of awareness, education that requires to go into this product. Sanjay, can we add or increase our investment in the future, particularly in the same offering? As long as someone else wants to sell their share, you can buy that. That would be the way for you to increase your investment in the future. Okay, I think there are a few more questions, and there's a specific question on how the repayment of capital works. So let me explain. So if someone invests, say, 1,000 rupees into the property, so one gets units of the trust then invests in the private limited company that owns the asset, and the private limited company, if it's 1,000 rupees, is structured as 100 rupees equity, 900 rupees of debentures. So say the rental is 100 rupees in the year that's paid out to the private limited company. That 100 rupees reduces your debt from 900 to 800, and then that money goes to the investor. So at the end of the year, the investor gets 100 rupees. The debt has reduced from 900 to 800. And because it's reduction of debt, it's not paid out as dividend, it's not paid out as interest. In the investor's hands, that's effectively tax-free. Yes, your cost basis, because you invested 1,000 and now you receive 100 back, your cost basis is now 900. So that later when you sell your shares, say 5 years down the line for 1,500, you're paying tax on 1,500 minus 900 at 12.5%. So hope that clarified the taxation part. A question from Shrikant: what is one unique thing about HBITS compared to other players? I think two unique things I'd like to say. One is, how patient, how conservative we are when we invest. And number two is the team that we have on board, the experience that we bring into the table, and also the real estate background that we come with. Akshay, yes, we have received our license from SEBI. We received it in the first quarter this year. I think a lot of these questions, the rental income and FD return are the same. No, FDs I think today are at 6.5% odd. Here the rental income is about 8%. Also, FDs are taxable at the slab rate, while the rental income, like I mentioned, is effectively tax-free. Akshay, what about property tax? So when I say 8%, that's considering net of property tax. Sanjay, at the time of exit, does the property appreciation, is it applicable transparently? Absolutely. We get a third-party valuation and it's extremely transparent as to what the property price is. Are properties insured against natural calamities, terror attacks, etc.? Yes, properties are insured. We insure all our properties, and that's obviously a SEBI mandate as well, that the properties need to be insured. I think, Sarthak, the questions keep coming, but we've reached our 45-minute mark. So I think all the remaining questions, we'll be in touch with you. Our investment managers will be in touch with you to answer all your questions.
Great. Thank you, Shiv, for the time and taking through all those questions that everyone had. And thank you all for the participation. We've had a lot of questions that we couldn't answer, but we'll be sure to put this together and send something out so that everyone has an idea of what the general questions have come from the group. So again, thank you all for joining. We really appreciate you coming and attending the webinar. It's been great to have you, and thank you all.
Thank you. Thank you, everyone.